Hi, welcome to 5-Minute Financials with Jack Driscoll. Invest 5 minutes of your time with me to improve your financial well-being. The second major change in the tax bill for 2018, the tax reform, are standard deductions and personal exemptions. What are standard deductions? Most people, 2017 and prior, had a choice of either taking a standard deduction on your tax return or itemizing your deductible expenses. So what we would all do as individuals, we would add up whatever our deductible expenses were that were allowed under the tax code. What were they? Medical expenses, we would keep track of through the year. Charitable donations, charitable contributions, donations to Goodwill, giving clothes to Goodwill, we would keep track of all of that and the values for those. Property taxes if we owned a home. Mortgage interest if we had a mortgage. We even got a write-off for our state and local income taxes in many cases, and we would add all those expenses up and be able to deduct them from our income. So we were not responsible to pay tax on any of those items. We were able to reduce our taxable income by all of those items. Or the government said, if you don't want to itemize and keep track of all that, we will give you an automatic amount that you can reduce your income by, because we assume some of those expenses are probably charitable donations or tax deductible expenses. So the old rule was if you were a single, the maximum was for standard deduction, $6,350, you would get automatically reduced from your income. Then you would add up all of your actual expenses in that deductible categories of what I just explained. And if you had expenses that exceeded that $6,350, maybe $9,000, let's say, then you would itemize your deductions and take advantage of the full limit instead of taking the free offer from the government of $6,350 without even accounting or attributing for whether they were actual deductible expenses for you or not. You just get it automatically. So it's either or, standard deductions, or you can itemize if that's greater. If you were a married couple in 2017 and before, the standard deductible was $12,700. So if your itemized deductions were $19,000 and you added them up, obviously you would itemize. Well, now the new tax bill doubled those limits, thereby eliminating the need for most people to probably itemize deductible expenses. Because now, even though home interest, property taxes, medical, and charitable are deductible items, they doubled the limit. So if you're a single person, the new standard deduction for 2018 and beyond is $12,000. So unless your individual expenses exceed that, you'll just fall into the standard deduction now and won't have to keep records on that anymore. And if you're married, the standard deduction just doubled to $24,000. $24,000 automatically given to you that you can reduce your income whether you have tax deductible expenses or not. So you add up your mortgage interest, your property taxes, your charitable, and your medical, and if it doesn't get near that $24,000, just take the standard deduction and call it a day. That's a big benefit. So there's really the second major benefit and second major change in this new tax bill. Most of us will enjoy that. It's estimated only about 10% of Americans starting 2018 will itemize. The rest of us, they truly probably succeeded in simplification. Remember, it only takes 5 minutes to improve your financial well-being. Check back soon for more 5-Minute Financials with Jack Driscoll.